Hey everybody, so today I am going to be talking about 8 different stocks that I am currently selling put options on. And, if you don't know what put options are, they're basically insurance that you can sell to a buyer who would want to buy an option that allows them to sell the stock if it drops a certain price. But they usually have to pay for the option, which pays to you as a writer of the option. And if this is all too confusing, don't worry about it. I'm going to try and explain a little more in this video. So before I begin, real quick, I do want to recommend you take a look into Interactive Brokers, the brokerage and the bank that is worldwide. It is a public company. It has all the good FDIC insured, all that. And the reason why I recommend it so much, especially for if you're selling put options, is because they have something called margin, which allows you to borrow off of your positions at a really low rate, the lowest rate out there of 1.59%. And basically what that means is usually whenever you sell put options, you have to have money to be able to buy the stock in case it goes down, in case you get assigned, right? And so a lot of people don't hold a lot of cash. And so what a margin allows you to do is just allows you to trade more. And in case you do get assigned, yes, you will be paying some interest, but if you are bullish on the stock and if you are okay with 20-30% returns, in this video I'm actually going to show you 8 stocks that have over 50% returns. Then you're definitely gonna you're gonna come up on top, way over the 1.59% interest. Okay, so if you're making 50% returns, 1.59% will be nothing. Okay, so take a look at yourself, and use my referral link if you like. You basically just get $1,000 up to $1,000 in free stocks. Recently, I had a family member received 5 shares of Interactive Brokers shares, and they were worth over $500. So check it out in the link below. And without further ado, guys, so the first stock ticker, we're going to start with the cheapest one, the one that takes up the least amount of collateral. So if you don't have a large account, you can start with these, and then we're going to move up to a slightly more expensive option where you're collecting more premium, but you need a lot more collateral. Okay, so we're starting off with Petrobras. Okay, Petróleo Brasileiro. I can never pronounce it, guys. I'm so sorry, but it is trading at $13.58. Quick background, it is basically the largest Brazilian corporation in the petroleum industry. Right now, it has a market cap of $85 billion, guys. Price earnings ratio of 3.44. That is insanely low. Dividend yield of 15.02%. I would not mind at all to have this stock. Okay, but instead of buying outright a stock at $13.58, what I'm basically saying when I'm selling put options is, okay, if the stock if the stock drops to a certain price, I will be more than happy to buy the 100 shares. So every option is 100 shares at a specific strike price. Okay, the strike price is a price right here. So in this case, if I were to sell this put option right now out into January 2023, I can collect $2.72 per share. So times that by 100, that's $272 off of collateral of $928. Okay, so that is over 30% return. If I do out to 2024, I can collect, as you can see, well over 50% return. I'm collecting $455 off of max collateral of $745. So you're collecting over 50% return. If basically what this means is if the stock goes down, yes, you may get assigned, but you're going to get the stock at a much cheaper price, and you'll collect the entire premium. Okay, you collect the premium up front, you keep the premium if you get assigned. So basically, guys, you just got paid $455 for buying shares at $12, and so that essentially lands you a really nice discount. Okay, so you're collecting both the premium and you get the stock at a cheaper price. Okay, so now why do I sell out that far? That's a good question. A lot of people will always ask this: why don't you sell weekly, bi-weekly, monthly put options? Well, the reason being is because if I do get assigned, especially in this year in this market where there's so much volatility, in 2022, I want to get it at as cheap of a price as possible, guys. I know, I can collect, more premium if I spread it out a little, if I sell put options every month. Yes, over time I can collect more, but guys, number one, I don't want to manage, weekly put options or monthly put options. I simply would be happy if either I get assigned at this price level, or if the stock just goes up, I just keep my entire premium. That is over 50% returns. Guys, I would be completely happy with 50% returns. So that's the answer to your question. I may or may not get more comments about that, but feel free to leave a comment if you have any other input. I'm always happy to take a look and dialogue with you guys. Okay, second stock ticker is HIMX. Okay, so Highmax. And so we're going to take a quick look at Highmax stock. Okay, so Highmax Technologies is a leading supplier and fabulous semiconductor manufacturer headquartered in Tainan City, Taiwan. Okay, it is sitting at a really low P ratio of 6.06. It does pay a dividend of 2.39%, market cap of almost $2 billion. Let's take a look, guys, at what we would do with Highmax. So let's see. If we sell a put out into January 2023, guys, we can collect about 25%. Okay, so over almost 30% just with a year out. If we go 2 years out, okay, so we will be collecting about $340 off of max collateral of $660. So that is, again, over 50% returns. This, in my opinion, will be a great trade. I'll be more than happy to collect this stock at a much cheaper price. And if for some reason the stock continues to go down, I can just continue to hold on to it and wait it out, and eventually I think it'll bounce back up. Okay, again, like I said, I'm going to fly through these real quick. Third stock ticker is SBLK. Well, actually, let's do BGFE first. Okay, so I want to try to do my best to go in order, okay, of least expensive to most expensive. Now, I may be off, but we'll see what happens. Okay, so BGFE, right now, if we trade at, BGFE real quick, if you guys don't know, it is a potential short squeeze stock. Okay, so this is the big five sporting goods retailer headquartered in El Segundo, California. Okay, it has 434 stores, market cap of $415 million, P ratio of 4.05, super cheap, dividend yield of 5.36%. Guys, I would be very happy to own this stock, especially at this price. If you take a look at the 1 year chart, there was a big short squeeze and it went down. And I think right now it is trading at a very reasonable price. If you do a year out, you can collect about $540 off of max collateral of $1,260. If we go into 2024, guys, let's see how much we can collect. Okay, so we can collect $725 off of a max loss of $1,000. Guys, that is insane premiums. We're collecting well over 50% on this one, and so this will be a great stock to sell put options on. Okay, next stock ticker is SBLK, Starbuck. Okay, so Starbuck Carriers. Okay, it doesn't say much about it, but it is in the shipping and marine industry. Is basically, the whole industry with the shipping across seas. Right now, it's trading at a very low P ratio of 6.67%. 6.67. Okay, market cap of $2.74 billion. Pays a dividend yield of 18.67. That is a very high dividend, guys. Let's take a look at what we can do if we trade options. If we do, a year out, you can collect pretty good premiums, about $700 off of max collateral of $1,800. But if you go out to 2024, okay, you will be collecting $950 off of collateral of $1,550. Okay, so that is well over 50%. A very good stock, in my opinion, to hold on to. Okay, so we're going to get into a little more expensive territory, but it's still not going to be too bad. Let's take a look first at two fintech companies. Okay, so first is Affirm. Okay, so Affirm yesterday dropped quite a bit. Okay, so it went down about yesterday was 22%. Okay, so just missed its earnings, and there was sort of a leak in Twitter of their earnings. So I think people are a little worried over what happened, but that's, it's trading at a market cap of $16.5 billion. Guys, this is a great company in my opinion. Do your own research. But without, going too deep into it, let's take a look at what options we can do. I'm just going to go straight into 2024 just because if I do get signed on this stock, I really want to get a huge discount on it. So right now, guys, if we trade put options, sell put options out to 2024, we can collect 1740 off of collateral of 3,260. Again, over 50% returns. Great company. Another fintech company in the consumer lending business is Upstart. Upstart is trading at $103. If you take a look at, guys, the Upstart chart, guys, this stock has really gone down quite a bit. It reached a high of $390, and right now it's trading at a low. The price earnings still is relatively high because the company is relatively new. But from its all-time lows, all-time low. Okay, that was very embarrassing. It is trading at $106. Okay, so if we sell a put option, again, I'm going to go straight into 2024 just because this stock is going to be a little more volatile. We can collect about $4,400 off of a max collateral of $5,600. Guys, again, way over 50%. A great company to own, in my opinion. Get on it really as soon as you can. I think this is going to be a great buy. Okay, so let's take a look at FLGT. Okay, we're going to diversify our industries a little bit. So Fulgent Genetics, okay, it's trading at a very low P ratio, 3.72. Market cap of $2.13 billion. Guys, it's been trading relatively sideways, but I think there's a lot in the pipeline of what this company is developing. Do your own research. Let's just take a look at how much we can collect on selling put options. Okay, so right now, if we go a year out on FLGT, we can collect about $2,000, almost $2,000 off of max collateral of $5,000. And let's take a look at 2024. Okay, so 2024, we can collect about $2,400 off of max collateral of $4,600. Again, guys, over 50% return if you sell put options, right? I would be very, very happy on all these stocks if I collect 50% or if I get assigned. And look at this, guys. A lot of these companies would have to fall about 35% before you even start to have unrealized losses, right? And at that point, you would just own shares, and all you got to do is simply wait it out and let the shares ride up. Okay, so that's FLGT. Let's take a look at the last stock ticker, CAR. Okay, so Avis Budget Group, guys. Avis Budget Group. If you don't know what it is, I'm sure many of you guys know, especially if you ever rented a car. Guys, it's trading at a very low P ratio of 15.39, has a market cap of $10.75 billion. It's definitely a short squeeze stock, but it is also a solid company. Right now, a lot of people are renting cars, and Avis is one of the largest companies out there that rents out vehicles. Taking a look at the option chain we have for car, let's take a look. Okay, so right now if we trade an option out to January 2023, if we sell a put right beneath the current share price, we can collect about $5,000 off of a max collateral of $13,000. That's not bad. That's not bad at all. Okay, so this means that car would have to go down 28% before we have unrealized losses. But let's take a look at if we sold a put option to 2024. Okay, so if we sold a put option to 2024 at the strike price of $190, guys, we can collect $7,000 off a max collateral of $12,000. That is, again, well over 50%. And that is great premiums for a solid company, especially in an industry that is very, very hot. And so this is the last company that I want to talk about today. It is the largest company and the largest amount of collateral you would need. You would simply need $12,000 because you're collecting $7,000. So $7,000 will be collected into your account. And guys, the beauty about what I said in the beginning with interactive brokers is if you use interactive brokers, you can borrow off of your positions. You can withdraw cash from ATM using their debit card. You can pay off credit card bills, whatever you need to do with the cash positions and the stock positions in your account. That's really how the wealthy trade. I talk about that so much in my channel. So if you like this kind of content, if you want me to make more content like this, where I screen different companies that will be great to sell put options on, because that's exactly what I'm doing myself, make sure you smash that like button, subscribe if you haven't already, and share this video with your friends, guys. I think this time in this age, a lot of people are going to become very, very wealthy, and this is one of the ways I think you can do that. Okay, I hope this content is helpful for you. Just invest safe. Don't do anything too wild. And again, guys, just do things in a good way. Okay, I'll see you guys around in the next video.
With every start, we are born again. Open your heart, spend less time in your head.